welcome to Markets Today with me, Gaurav Kashyap, your market strategist at Equity Global Markets. Guys, it's FOMC rate decision today. We've had 2 days of rather subdued market movement in the lead up to this release, and we can expect to see market volatility to pick up significantly following the announcement, which is due out at 1800 GMT today. A couple of things to point out in the lead up to the FOMC. There's absolutely no chance the Fed will be increasing US rates from the current band of 1% to 1.25%, and it'll be the accompanying statement which will draw the most attention. Markets will focus on the wording of the Fed to gauge their views on upcoming growth, employment, and the inflation scenario in the US. Also look for clues in the statement about potential reductions to the current US asset purchase plan. Some markets are expecting a tightening schedule to be released as early as September. Overall, as I've maintained in previous segments, the Fed Chair Janet Yellen may acknowledge gradual growth in the US data docket, but the FOMC are definitely not armed with the required US run of data to commit to a very hawkish statement this evening. Along with this, I think the uncertainty clouding Washington affords the FOMC time to see how things pan out politically before making any major announcement. Considering these views, guys, I feel the FOMC may let down dollar bulls today, and this could see some weakness in the greenback through tonight and tomorrow's trading session. Earlier in the Asian session, we had the release of the Australian inflation data, which largely disappointed markets. Quarter-on-quarter Australian inflation for the second quarter came in at 0.2% actual. This was well below expected at 0.4% and well below the previous reading of 0.5%. The year-on-year figure also disappointed, coming in at 1.9% actual versus 2.2% expected and 2.1% previously. It was a sixth consecutive quarter of lower than expected inflation in Australia, and following the rather optimistic comments from the Reserve Bank of Australia last week, the data was a big miss on the downside. The Aussie dollar, as a result, broke down below 0.79 levels against the US dollar following the announcement, and despite this large miss, this should present good long opportunities at 0.7850 levels against the US dollar going forward. In the European session today, we had the release of Q2 GDP reading from the UK. This dropped to 1.7% year on year. This was marked down from a previous reading of 2.0% last month. Markets were largely pricing in this move, and hence we haven't seen much movement coming into the GBP crosses. Expect the GBP USD to range between 1.30 and 1.3080 in the lead up to the FOMC decision today. And finally, perhaps the star of the session has been the West Texas crude oil contract. WTI crude closed yesterday's session more than 4.5% higher following a shock drawdown in the weekly API inventory report. This report showed that there was a weekly drawdown of more than 10.2 million barrels in the US versus an expected 3 million barrel drawdown. Following this release, crude spiked above 48 levels and eventually found strong resistance at 48.60 levels. We expect the official crude inventories due out today, the weekly EIA report at 14:30 GMT. And although the API data and the official EIA data rarely match up on a week-to-week basis, a confirmation of such a large drawdown in the EIA release could see further bullish moves in the crude contract in trading today. Guys, again, if you liked this video and you found it informative, please give it a like, please give it a share. If you had any questions about what we discussed today, please leave them in the comments below, or alternatively, you can tweet me at EGM Futures on Twitter. I'd be more than happy to address any of the comments or questions that you may have. And if you haven't already done so already, definitely check out the newsroom at www.equity.com. It's packed with interesting market-related content and analysis that will ultimately help you trade smarter and trade better. Have a great day of trading, guys, and I hope you navigate the FOMC rate decision well today.